All right. Good afternoon, everybody. How we doing? Looks like my webcam widget's a little messed up. My bad. Tried to zoom in on myself so you guys could see me a little more, but I've apparently messed that up. It's been a hell of a couple weeks, or a week, or I don't even know. It feels like a year's gone by sometimes, and it's like 3 hours. But as you guys know, we've been ripping. We've been ripping pretty good, and it feels good. It feels especially good for me because I was the only person in my entire feed who was not mega bearish the entire summer. So we're thriving, other than the fact that we own a little too much Ethereum and not quite enough Bitcoin. But we'll talk about that and what I might be doing about it. Big hello to everybody in the chat. What's up? What's up, Edmund? What's up, Tunsky? Let's give the stream a like.
Market data connection
if you guys want. Helps people find me. I'm trying to grow this channel. Also, if anybody hasn't seen it yet, me and Eric did a nice episode last night on Alfalfa. We kind of did a pilot episode for a new pod we're considering doing, and I think it went really well, other than the enormous technical glitches to to start everything off. But yeah, I had a lot of fun, and I'm definitely looking forward to doing it again. What's up, Eric? Glad you're all caught up. Yeah, let's just jump into the charts, shall we? So let me pull up King Bitcoin over here. Bitcoin just doing the thing Bitcoin does, which is to absolutely rip. Oh my God, seizure. Let's get rid of that. There we go. Absolutely ripping. Those of you who have been around for multiple cycles know this happens basically all the time. We get Bitcoin ripping. All the Bitcoin maxis tell you that everything is dead. Bitcoin's going to 10 million, and then all the other stuff eventually pumps. But yeah, we've been watching Bitcoin all year for a very long time. Been kind of having our eyes on this sort of range here, which I went over a little bit on the pod last night. Excuse me, I got a twitchy hand right now. There we go. So as those of you guys who've been following me know, I've been basically targeting this zone up here forever, and it looks like we're well on our way to that right now. We had to get by this beast of a line right here at around 32K or so. I'll make it real thick to represent what has happened here. So we've had a real paradigm shift so far. We've gone from the bottom half of the chart to the top half of the chart, and now the big question is, can we stay there? And yeah, no, the candles are still blue. I don't know. I'm not good at tweaking stuff, but yeah, we're all blue on this stream. So yeah, we got weekend and we've got month end basically at the end of the week. I think they're like a day apart. And what we really want to see very badly here is for this weekly candle to close strong, to close well above this 32.5K high. And we want this monthly candle to close strong. The scenario we have to worry about, right? And at those of you who watched episode 1, you guys know I was expecting a big move up at some point in time in Q4. But what I said was that I wanted to be wary of a manipulation move happening in sort of the opposite direction. And there's kind of two ways that you could look at this depending on what price does. You could say like, okay, this was our sort of a accumulation range here, and then this was our manipulation down here, got everybody all panicked all summer, and now we're going to run up, right? So that's one interpretation of it. The other way of looking at it is that this entire thing here is basically like a gigantic distribution range, and that what's going to happen now is we're gonna kind of push up into here and then get everybody excited, but then break down back inside the range. Right? This would be a high time frame deviation. This is what we do not want to see this, because we've got this mega range we've been trading in for a while here, from 15K to 32K basically, and we want this to sort of be the giant accumulation range for the next bull run. We don't want to be at the sort of top half of a distribution range and the other half of a manipulation leg, because that would mean Q4 ends up very bloody in the other direction. See, I can just put this range on here real quick so you guys can see what we're sort of working with. I think if we run the top of this range, don't hold, and dip back down inside, it feels pretty over. I think at a minimum we go to 24K, but in reality we probably test this kind of box here again, probably run that low around 19K, but we're not going to assume that's happening until we see something to let us know that that's the case. You always want to have the downside prepared. I'm very aggressive with my crypto positioning, which means I have to be kind of aware of all the horrible things that can happen, and I don't really stick my head in the sand. If you zoom way out, like I think Bitcoin still looks really, really good. So this is a 6-month chart. What I had pointed out a couple months ago was the 6-month candle that closed in at the beginning of July. Because what I was looking at here was this gap. So we had the gap there, and then we also had this huge level here, which is basically the 2021 low. So this 6-month candle right here closed above that gap, closed above that low, closed above the second half 2021 low. These are all really, really strong signals. And then, most candles, when you have a bull candle, you typically have a wick first, right? So you get the wick, and then the candle expands up. And when we have a horrible bear candle, right? You've got the wick at the top. Yeah, and then the candle expands down, and that's no bueno. So I think we're in the midst of a 6-month candle that could take us pretty high, honestly, depending on how everything plays out in the next 5 days or so. But yeah, step one to me is I really like this level right here. This is a 37.6K. Basically fill this gap. I think there's a CME gap here somewhere as well, and then that takes us right to the supply area here, which is sort of the next thing to get worried about. I imagine that we probably dip into this, have a pullback, not as far as people want, and then probably make a run for this 48K high here. And this to me will be the signal that we're going for it. Like I think if we run 48K, it's just like a matter of time until we take out 69K. So Bitcoin's looking strong. I highly recommend having some Bitcoin in your portfolio right now, because everything out there is not really outperforming Bitcoin. The biggest concern I have is with ETH, BTC. The unfortunate part about my portfolio is that I got very bullish at a time when it was correct to get bullish, but not so much for Ethereum. I bought a little too much Ethereum, not enough Bitcoin. And this sort of zone here around 0.055 is not looking like it wants to hold right now. the hopium is that we're going to get some sort of manipulation and then kind of ripper through all of these untapped highs here into the top of this range around 0.08. But it's not looking good right now. And I actually last week did something I haven't really done before, which is I shorted Ethereum, Bitcoin, I don't know, somewhere around here as a hedge because I don't have enough Bitcoin in my portfolio. So doing that to to ease some of the pain. As I've said before, like if we don't hold this zone, this is where we're going. I think probably the mid range of this area, 0.038 or something like that, which is pretty brutal. That would be another 30 or so % down from here. Hard to imagine, but could certainly happen. If we zoom in on the daily chart, you can see how bad this has looked since September. I mean, this is just absolutely down only. Tunsky, what was the hedging method? I just longed Bitcoin and shorted ETH in one of my perps accounts. So nothing too fancy there. I think what we want to see is this high right here ran. Let me just delete everything. It's too messy. Yeah, this is your daily structure right now. So if price can come up and flip this, right, and then retest, this is sort of one of the, this is basically like an entry method I use, right? So over on the left side of the chart, you've got like a very high time frame area of interest, because this consolidation zone is what gave us that mega pump last summer before the merge, right? So when price goes here, you are expecting to see a reversal. But just because you're expecting to see a reversal doesn't mean you just YOLO long this when it goes in the zone, because it can keep going lower. So if we do get this structure break to the upside with a close above 0.055 or so, and we get this kind of retest of the move that broke the structure, that to me is like a good long trigger. Like, so if I see this happen, I'll take off the short, and I'll just let my ETH do its thing. I don't really want to sell the ETH for Bitcoin because it's going to cause me all sorts of nasty tax implications, and don't want to do that. But yeah, this is what you want to see. Otherwise, like we said, the scenario is that we're down very bad, and we end up somewhere in the sub 0.04 range, and that won't feel good. Something worth noting is that January for Ethereum tends to be just unbelievable, like basically every time. So if I pull this chart up here, I'll show you what that looks like. So you had so here's January, start of a ripper move that year, January 2020, bottom, start of a nice move right here, and then we go back to 2018, basically mid-December, close to January, and then we have this other ripper move here, and then we can still go back to 2017, and in 2017 we also did it. So all of these years have seen a just insane rip in the price of Ethereum relative to Bitcoin in January. So if you are fortunate enough to not be heavily allocated into ETH right now, like maybe you're really heavy on Bitcoin because you're smart and not stupid like me, you could get a good setup. Like if price can kind of languish in this zone for a couple weeks and then do the kind of manipulation thing, like you may have a nice setup right around the start of January to go long. And if this thing just dumps below, then, well, you don't have to worry about it. And then maybe you can think about buying here, or converting your Bitcoin or whatever into ETH there. So yeah, that's my rough plan as far as ETH BTC goes. The ETH chart in dollar terms, obviously not as good looking of a chart as Bitcoin. There's no doubt about that. Bitcoin has already taken out the equivalent of this high here at 2140, and Ethereum is still sort of well below that. We're in a critical zone right now on ETH. I told everybody in my friend tech chat after we had that big move that the place to hedge was. I'll show you how I did that. So if you zoom kind of way out and ignore all of the noise on these charts, what you have is a kind of higher time frame move that looks like this. Right? So this zone here right here, you can think of this entire thing as like one leg up. And when you have these large swings, there's certain areas in the swing that tend to give price a reaction. And one of them is the 50%, right? So if we want to focus on this this swing here, I've basically fibbed out this entire move, and you can see the 50%. And it was a really nice support for price on all these daily closes before we dumped through it. And then you can see on like the hourly chart, we've reacted pretty well off that level. Like it was resistance, flipped support, little quick deviation, back under, back over, back under. But if you hedge there, right on that line, you basically nailed the top of the move thus far. This isn't something I really did because I don't know. I just think we're going higher, and I'm trying not to get too fancy here. But it was totally not a bad move, because in reality, if we cleared this zone here, price goes up here, it's probably not ripping all the way up. It's probably going to kind of retest this and then go higher, and then you could actually just kind of probably just get out of your hedge here. So take a really small dent on your short hedge. But in the instance that price actually just, like, this is all just a ruse, and price dumps back down, now you're sort of protecting yourself. But yeah, Ethereum right now looks like it is consolidating under that zone, which is what we want to see. This is just a clean little range here that we've got. So yeah, hopefully price just kind of bounces around here and then gets a big move up. And I do think there is some potential fuel for that. We've got people pretty offsides on options right now. People have been publishing some rather aggressive on-chain shorts with very reachable liquidations in the 1900s. So I'm hopeful that once Ethereum clears this area right here, this daily order block, once that happens, I think we're good to go. Like I said, I think price probably just pushes up, maybe mitigates this zone, maybe comes back, and then makes a run. That is the hopium anyway. By the way, if you guys want me to look at anything, feel free to shout it out in the chat. Otherwise, just gonna kind of take you through some of the other stuff I'm looking at. One coin that's pretty interesting to me is Link. And Link is just a absolutely hilarious chart. I mean, we had like the mother of all accumulation ranges here. And I'm still kicking myself for not getting in this trade because I literally called this exact thing happening like months ago. And you can see that if I were paying attention, this is what you want in your trade setup. You got a long accumulation range, you got a manipulation under the range, and then you've got this sort of start of a market structure shift, and then you whoop. This one was kind of tricky to get into. Normally you like to see it, break this high, kind of come up a little higher, and then retrace back down, and then give you the entry. So I'm not sure I would have caught this entry anyway. I mean, I'm sure if you look on the lower time frames, there's probably a spot to get in here. And yeah. So basically, this zone here gives you the market structure break to the upside. We come back, we test that zone, and you could basically just get in here, the stop below these lows. And that was a nice trade. That trade's already up basically 100%. I think Link's probably going to be one of those things that doesn't give you a nice clean retest on the daily. Like I think it's very unlikely, if we're going to push higher, that it just comes down here into this zone and just gives you this easy buy. It's probably going to do something like this may have already been the move, right? Like this wick right here into this daily fair value gap. That that could have been the chance to get in. When I see trends like this, I'm often going on the hourly chart to enter, and I'm looking for a zone that gave like a big move that hasn't really been mitigated yet. So that would be this down move right here is interesting to me. This is sort of the little swing that gave like the market structure break, and we've kind of tapped back into it, right here. But on like a lower time frame, like this is still bearish market structure, right? Like this is this high right here. As long as we're below this high, your bias is that this is still going to trade lower. So I'd be watching for something like this, and probably looking to hopefully get in, somewhere in this $10 range. And Link is one of those coins too that I just kind of want to have a spot exposure to. I don't really think there's any sort of other coin you can have in your portfolio that kind of fits the niche that Link has. I think there is a world where Link becomes like bigger than Ethereum. I don't think it's a high probability, but like I can see stuff happening in crypto that would do that. I also see many more worlds where Link just goes to zero that Ethereum doesn't. Also probably won't happen, but like I want this in my portfolio for a point or two. You know what I think I'm gonna do? I'm gonna pull up the Atom chart for you, Rectum. See what it looks like. I haven't looked at it in a while, because why would you look at an Atom chart? Oh God, that is pain. That is pain right there. That is pain. Oh God. Yeah, we're kind of back into the pre-2020 bull market accumulation range pretty soon. Yeah, one of the reasons I'm not so sure the bull market has completely started yet is because there's a lot of alt charts I look at that look like they actually just really want to go lower. Like this low here, I'm so surprised if that low doesn't get ran and then this would be a your classic setup to get long in this zone. But yeah, I mean, this is this is just straight down. It's super painful because, like, like Bitcoin's protected high, where there's like a shift in market structure, is right here, right? Like, it's pretty close to the current price of Bitcoin. So you only need a 30 or 40% move up from here of Bitcoin, and then you're kind of on your way to Valhalla, right? But if you look at the equivalent of that on Atom, it is a long ways away. 368%. Yeah, so you, so you need a 3x in Atom to kind of reclaim that structure versus like a 30-40% move in Bitcoin. So yeah, this is one of these things I might trade, but I'm expecting it to just be like maybe a nice swing trade, because anywhere in here you could get a reversal. You could definitely get a reversal anywhere in here, and it's a long way back down, like if you don't take any profits. So I don't know, there's charts that look so much better than Atom. It's not even on my radar. So we had a request for Solana. Sol is definitely something I've been watching for a while. Made a lot of money this year trading it, but unfortunately I've just been kind of swing trading it. I haven't really accumulated a lot of spot and bought it yet. So oops. Let me get that back. All right. So the Solana monthly chart, still not bullish. Like, I view this as like this is the bottom, right? And this low, where did this low came from? This low came from this high. So this is your monthly structure. We want to clear like $48, and then we're looking pretty good. Another 50% or so up from here. That would be pretty comforting. As of now, you do have this kind of zone that, same idea that Bitcoin had to push through. You've got all of this supply here, and that's sort of what we're struggling to break through. I think there's a pretty good chance that we rip through and we take out the equal highs here. This is basically like a liquidity magnet. This is a great setup for not just a swing long, but a swing short. I really like setups like this, because what you have here is you have the higher time frame supply right here, right? So your higher time frame zones are going to take precedent over your lower time frame zone. If the chart is bullish on the daily, but you're running into like monthly resistance, the daily chart's not going to matter. But this gives you a setup where there's like a clear liquidity target. And then there's a big reason for price to take these lows, but then stall in here, maybe around $42, $44 or something like that, because it's going to run into this supply zone. So I would be looking as a trader to sort of trade this both ways. I haven't looked at what an entry might look like right now to go long yet, but this would be like a really interesting short setup, and not even to necessarily short it all the way back down, right? Like it could simply do this and then this and then go back up. So I'd be a little patient, I think, with Sol right now, as far as what it looks like on the daily time frame. Have we closed above this high? Okay. So we've had a daily close above this high, which is a pretty good sign. I think right now we're just, I don't know, this kind of looks like, this just looks like vertical accumulation to me. So I think this is the type of thing where you get one of these just random super god candles that just rips and just clears the entire supply, and wipes those equal highs at the same time. So pretty interesting spot, to be honest. Yeah. I mean, I guess if you wanted to swing this, where would you get in here? Yeah, I'd be looking at this leg here. This is the leg that gave us the most recent market structure break to the upside. And we're still bearish on the lower time frame, but we have this kind of bullish structure on a higher time frame. And you very frequently see price do this thing where it taps once into the zone, retraces into the previous supply zone, and then double bottoms, right? And when you get this, then you're looking for some lower time frame bullish structure shift, and then you can kind of get in here and then ride this thing up. So that's what I would be looking to do. Of course, crypto can be pretty gnarly sometimes. Like sometimes you get one tap and it's just like sayonara, goodbye. But I don't know, if you're trading, you have to be willing to kind of miss these moves sometime in the name of managing your risk and not just kind of YOLOing out of nowhere. So yeah, big fan of Solana for the next bull run in general. I think if we zoom out and take a look at what's going on here, is this going to make all-time highs again? I don't know, but if you accumulated down here and we just kind of run into this monthly supply, I mean, that's a 4x still, even just moving into $111 or something. Definitely a decent chance we could take this high, 143 or so. So yeah, if I were a Solana bag holder, my plan would not be to just rely on this thing going to new all-time highs and beyond, because I don't think that that's a given this cycle, if ever. But you still have great trades in front of you. I mean, like even trading to this monthly imbalance here, this is still like a huge move, right? This is still a 200% move from like a pretty cozy accumulation range, and we probably are going to end up going higher. So a lot of opportunity there on Sol. Really like it. What's up, Bernie? How you doing? All right, yeah. Let's look at some of the L2 charts. Let's look at Arbitrum. Well, that's not a pretty monthly chart, but not a lot of price history on this coin, obviously, because it just came out in the spring. Weekly is still pretty ugly. This is your lower low, came from this high. Then we had, where did we close below? Okay, we closed below here. Came from this high. You can maybe just call that the low. So yeah, I mean, ARB is still kind of high time frame bearish all the way up until $1.35 or so. So kind of tricky. That's a pretty good move, it's 40%. But I don't think it's just like magically out of the woodwork, right? Again, like you want to imagine this on the higher time frame swings, which look like this, right? So you could have this come all the way up here, and it's just a lower high, right? even if it does actually end up bottoming and go up like that. So that's definitely a potential. If you look on the daily, you have more stuff to be optimistic about, because on the daily, right, you definitely have broken daily structure. Right, like this was the move we wanted, basically over these highs, closed above these highs, and yeah, it's possible this is a double bottom right here. Very possible. I think we were talking about it a few weeks ago, and it was it here, or it may have been here, and then yeah, we kind of got that little mini manipulation below this sort of accumulation range here, and now we've moved up. So if price kind of retraces back into this zone here, it's pretty interesting. 80 cents or so. At the same time, this is a pretty strong move, right? Like this is just all this is all light blue candles. This can go just straight, into here. This is probably a pretty good target if you're trading this this daily fair value gap. A lot of these coins like to bounce off of this. And the other thing that's interesting about this daily gap is if we fib out this larger swing, I guess it's not really at the 50, but the last point of supply, really, right here, is actually pretty good alignment with the 50 level right here. So this would be really tricky to get through this kind of $1.15 zone. So that's where I would be expecting like a pullback if we don't get one at $1.10 or so, which I think is pretty likely. I bought some ARB. I don't know. I probably bought some at like 95 cents. I would guess is like my average price, maybe a dollar. I'm not really in a rush to buy more here, to be honest. I think there are charts that look a little bit better. But if you're sort of like a long-term ARB bull, knock yourself out. I don't have like a great thesis on L2s right now, I feel like. And I know there's some like consensus belief that they're going to just be magical, but I don't know. Tunsky, I did not tell you to dump all ARB at 1.13. Don't you dare do that. You'll be very mad at me in 5 years when it's like $20. Let's look at OP. We'll round out the layer 2s, and then we'll pivot to some stonks. You guys want the stonks? I already have a doodle on here. Okay, this is a doodle I made from the a previous stream. Price is behaving very well so far. Yeah, we got a nice bounce off this zone. So same thing with OP that we talked about. Like I really am trying to stay focused on the larger swing points, because those are going to dominate the smaller swing points. And on ARB right now, you kind of see these as the kind of really big ones there. But if we zoom in a little bit more, you can kind of do a similar thing with the daily structure, because this is sort of your lower time frame market structure, and then we have a shift right here. But what's weird about this is like we don't actually put in any lower closes until down here. Let me just remove this stuff so it doesn't give you such a seizure. Yeah, this low really makes the chart weird. Like I don't like to consider moves to be market structure breaks unless we get the close below. So like this was obviously the break of structure here and retrace, but we actually don't break here. We don't break here. We don't really break until here. And now we're moving back up. So this is kind of like another similar. So I don't know if you guys recall me mentioning on stream, but I was like, I'm absolutely not shorting this. We kind of had this like head and shoulders type thing going on, and I was like, look, I'm not shorting this. I think this could definitely just be a fake out, because you have some traps in here, right? Like if you look at market structure in the way I look at it right here, your protected high is up here. What people might be thinking is that this high here is the protected high, right? So people might be placing a lot of stops above here on their shorts, and this is like what we were talking about on another chart where I said like I like to see this big zone backstopping a lower time frame liquidity target that's not going to invalidate structure. So if price ends up coming in, actually we did run it already. I just noticed that. We might get another move up though, you know, something like that is a possibility, because even though we broke this high, a lot of people might be like, oh, this is bullish structure, it's going to come down here and then I'm going to long, right? But in reality, we do that because we run into this swing leg right here. Remember, like this is basically the path. So pretty interested in maybe taking a short somewhere over here, depending on how price action develops. And you can see these Optimism loves reacting off these daily fair value gaps, right? Like you got one here, you got one here, you know, you got one here, right? And you can see in each of these gaps, these have been like really good short entries. This was like a epic short entry right here. Same deal. You've got this higher time frame swing that causes the break, and then you have a fair value gap lining up with the swing. And look at that. It's just perfect. Like this taps off the. It's such a nice setup when you get all of these things that overlap. You get all this confluence, right? Because you have this higher time frame swing. If you fib it out, you can see the 50 is this bright line here. So you got the 50 and you got this order block. And what does price do? It just perfectly basically taps into the 50, rejects away, sharp move down, and you're never in drawdown, which is incredible, right? And then you could see here, price totally disrespects that, right? We actually close through it. And to me, that's a signal that price wants this, right? You're starting to disrespect some of the order blocks, some of the PD arrays, as we call them, which means that we want the top, and we do indeed take the top here. But I would kind of be surprised if we didn't make another run here for something, because we could take this high too, and still be technically bearish on the higher time frame. Let me zoom in a little bit, see what the 4 hour looks like. And yeah, like this to me looks like it's consolidating and wants higher. None of these lows have been breached. You know, we kind of set this low initially, and this is pretty common where you have price ranging, and you sweep the lows into a gap, right? This is something really interesting to note. when you're trading. When you have like really big impulsive moves that are going after like a higher time frame liquidity target, you very frequently do not get price just neatly dipping back in to these supply zones and carrying onward. It's very common for the big move to leave a gap and for price to just wick into the gap and then continue upward. So if you're looking for entries into these like super strong trends, one thing you can do is sort of, identify some of the initial lows, and you can just kind of place some limit orders below those lows. The danger, of course, is that price could super nuke, right, and come through and stop you out. But in reality, like if you place the stop below the prior zone of consolidation that gave you the prior up move, you're usually not going to see price kind of wick through there and then just be really bullish and go back up. So you can kind of set your limit orders there, right? And then like you could have just targeted this high initially if you wanted to, but that's not a super good risk reward, so I'd probably be looking for some higher time frame stuff. In reality, if we run this high, we're probably into these wicks here at a minimum, because this is sort of a resistance zone in and of itself when you get these large wicks overlapping with the daily fair value gap. Price can definitely return to this gap, so it could be something interesting to target, and that will give you a little 2-to-1 risk reward. And then when you take these trades as well, like you could have that tight stop initially, that loose stop initially, but then after this plays out, there are things that can happen with structure where you can kind of tighten it up. Maybe get a new invalidation, maybe add to your position with like a tighter stop. So a lot of ways to skin a cat. I'm not gonna tell you how to trade, but just some advice. Okay, yeah, Calcium. Let's. What did you want to look at? Bernie. Oh, did we already discuss how to determine the protected high? Yeah, I mean, I could do a 3-hour video just on market structure, Bernie. The way I choose highs that are protected in bearish downtrends is I look for a close below the previous lower low, right? So here, this was the previous low. Here we have the break and the close below that low, right? So then you go left and well, what is the highest point between these two? And there's your protected high. Trading is hard because price doesn't just do this. If it did, we would all be billionaires, right? In reality, the way price moves is something like that, right? So it can be very easy to get yourself off sides at a million points in this, right? Because when it comes to highs and lows, there's sort of like three kinds, and this is maybe going a little too down the rabbit hole, but you have like your higher time frame highs and lows, you have your intermediate time frame highs and lows, and then you have lower time frame highs and lows, and each of those structures is beholden to the structure above it. Like a bullish long-term, a bullish trend on the lower time frame is going to run into a higher time frame bearish structure, and it's going to be dominated, and it's not going to hold. But in something like this here that I just scribbled out, right? You're focused on these highs and lows, right? This high, we break break this high, and this is the lowest low, right? And then this high here, this is bullish structure on a lower time frame, but it runs into the higher time frame structure here and trades down, and then you get these lows taken. But this low here is the protected low of the swing. In reality, well, actually, excuse me, it's actually down here. So the price can go all the way down and still be bullish on the higher time frame. And then when we run this high here, now this becomes the protected low. So basically, every time you close above a previous high, you sort of backtrack, you find the lowest low, and you kind of repeat that process. And like when I have charts, like I sometimes have, I don't do it as much anymore because I kind of see this stuff in my sleep now. But you can have multiple paths on your chart to keep your head on straight, right? Because you have this very, very high time frame swing here, right? But within that higher time frame swing, you have a bunch of other market structure, right? You've got this one. And then like if you zoom way in on any of this stuff and you go to like a hourly time frame, you're going to see right here, this move. This is just one high time frame market structure. This is one high time frame swing down. The one high time frame bearish swing, right? But within it, on the hourly, you've got all sorts of stuff going on here. We're up, we're down, we're up, we're down, we're up, we're down, we're up, we're down. But when you're taking trades on these lower time frames, you want to keep in mind that the general direction of the whole order flow is bearish, right? Although price is going all over the place in this particular range, if you are making shorts, on average, your shorts are going to be doing a lot better than your longs. You're going to be able to hold them for longer periods of time. And it's probably best if you're like a beginner to not trade against the higher time frame trend at all. Like if the higher time frame trend is bullish, then just only look for longs and kind of swing with the tide. All right, Bernie, hopefully that made sense. Can definitely keep talking about this in ongoing episodes because it's not the type of thing you get hearing it one time. What did you want, Calcium? Oh, Meta, Google, Apple. Oh, yeah. So stocks look a lot worse than crypto in many cases, even these sort of Magnificent Seven type stocks. Facebook or Meta, whatever you want to call it, it looks pretty ugly to me. Pretty ugly. Obviously, this is the prior all-time high. We haven't taken that. That would be like a huge paradigm shift for us. That would be mega bullish. But right now, if you look at the monthly, you've got this, call it the last up candle before the down move, monthly order block. And again, look at the symmetry. Look at what you have here. I mean, the 50% of this monthly zone, right? Like if you're trading on the lower time frames, you need to be aware of these monthly zones because what happens at the 50 of this zone, you get like a almost perfect. It is a perfect tap of it. Yeah, look at that. That's crazy. So you get it tapped to the absolute tick. And if you're paying attention to price reacting off that monthly level, you can catch this like enormous move down because you had this level on your chart. And then as we so frequently see, when we're looking for reversals out of like a zone, we generally want to see like some sort of double top pattern, and this happens on multiple time frames, right? So here's a double top here, right? That's just this initial leg, because we initially hit this and we traded down, but not all the way back down, came up to test the entry, and then after the double tap we get the huge leg. And then if you zoom out a little bit more, you could say, okay, this is one tap from this leg up, and now this is the second tap from this leg up. What happens? We get another double top on the higher time frame, and then boom, we get this move down, like big move down. So anyway, back to that zone here, because this is really important. So if I go to the monthly chart, back to the monthly chart, this was a hell of a move, and there's actually no logical place for the monthly to go, right? Like you could use fibs and say, okay, well, there's the 50 here at 207. Maybe that's a target, or you could, you could use your optimal trade entry fibs and be like, all right, well, I kind of want to I want to look for a long between the 0.79 and the 0.618, which gives you, this zone down here. But on the monthly, you don't really see any obvious places where this could reverse, because it's just all up candles, and what goes up quickly can go down very, very quickly. There's absolutely no reason why we couldn't just come all the way back down and reverse that. But what I'm curious about is this structure break here. Like, what gave us this move? Like, where was the demand that gave us that move? So we have to zoom in to lower time frames, and if we go on the weekly, now we actually see some semblance of tradable demand zones. All right, we go in here. Some of these are like really, they're pretty tiny, because this was one of those kind of, this is like we were talking about before, where you got this huge impulse move up from the bottom, and it was really hard to get an entry, because if you were just sitting here waiting for price to retrace back into prior demand, you didn't get it here, you didn't get it here, you didn't get it here, you didn't get it here either. And what's interesting is, let me see the daily. Might be a little clearer. Yeah, I don't know. I'm gonna stay on the weekly for now. Yeah, what I'm really focused on looking at this is this candle right here. Like that candle, I'll clean that up for you. This candle here is really significant, because this is the move that broke structure. You see we have a strong weekly impulse, close above this high, and then we just turbo it up from there. So I think this zone is probably a decent candidate for a reversal. I think all of these zones are areas you can get a bounce from. You can see we already tapped the zone once, got a really big bounce off of it, but just put in a lower high. So it's possible we bounce again and do this and then break it and then come here. That's definitely a possible scenario. But there's no reason that price has to stop here, right? It could stop here at 180, and then the other option you have to still remain bullish is that you can kind of come to the origin of the move, which I'd probably consider to be this this last down candle here, roughly this zone here. So you'd be looking for price to come into here and do our thing where it, you know, has some like manipulation leg and then a structure break and then kind of get in on a retest. Maybe that's a 4-hour chart or a daily, but that's how I think about it. But if you want to be buying Meta here, I say good luck to you. Good luck to you. The risk reward looks really, really terrible. You want to think about this range, this whole leg up as a range, and you want to think about where value lies in this range. And we know that above the range equilibrium, this is premium. So price right now is in a premium to this current dealing range. And then down here, we're in a discount, right? So the move that gave us the structure break is actually in a premium, which makes me think that it's more likely that we find a zone that's in a discount to reverse from, right? So this zone right here is the first really juicy zone, you know, around like 183. That's actually in a discount. So I'd be looking for a reversal there if I were trading this. And man, yeah, it's pretty tempting to look for a short. Let's see if the 3-day chart looks, yeah. So this low here